despite pervasive political risks that exist in Zimbabwe, it still is a fully functioning banking sector and stock market. Joining us now to discuss banking in Zimbabwe as part of a Banking in Africa conference in Sandton at the moment is Donaldson Mandishora, Head of Corporate Finance at Royal Bank of Zimbabwe. Mr. Mandishora is attending the Banking Outlook conference, as I said earlier on. Thanks for your time. Let's start with the conference itself. What are the key issues to emerge?
It's a very interesting conference. And so far, today being the first day, we've been talking about the things that are really, really important in banking in Africa. We've been talking about how we can approach and target the unbanked sector. Yeah. We've been talking about the opportunities that are available in Africa. We've been talking about how to get our brands right. Mm-hmm. Yes, it's been very, very interesting. We've been talking about how to deliver better service and customer care. Right. So it's really, really interesting. Well,
obviously that's moved the conversation forward because last year, the huge focus was on risk management, capital adequacy, subscription to Basel III for African institutions and globally as well. The challenge, though, I think many people argue, is that in Africa, banks target government contracts, parastatals, the elite. The banking, the unbanked that you're talking about is something we pay lip service to. It's not something that we're doing. What are banks saying in response to the developmental needs of the continent?
Well, maybe people might say that about other countries, but in Zimbabwe it's very, very different. You find that we've even coined a term for it now. It's called downscaling into microfinance. As a nation, we've realized that there's almost about 5 or so billion that is in circulation in Zimbabwe, of which about 2 billion is in the formal sector. Yeah. The remaining 3 billion is in the informal sector, and almost everybody is interested in going after that portion. So speaking about us as a bank, we have come up with very, very innovative and structured products that are really targeting that sector. So yeah, I don't think there's really so much truth in that statement.
Let's talk about the pervasive risks in Zimbabwe. I've read many newspaper headlines and spoken to numerous Zimbabwean editors on our CNBC Africa platform. And there's a so-called banking crisis currently underway in Zimbabwe, where corporates are defaulting on loans to banks, where there's a liquidity crunch because it's a dollarized economy. Yeah, just a lot of problems. And what makes it even worse is because we're not quite sure on the status of the central bank, it cannot come in as a lender of last resort. So to a large extent, banks are just having to cope on their own, and where they can't cope, they're going into some sort of liquidation and bankruptcy, and that seems to be the situation underway.
I would disagree with that, because if you look at the state of the Zimbabwean banking sector right now, ever since the introduction of the multiple currency regime, we've been doing very well. In fact, in terms of the figures, since January 2009, in January 2009, we had about $237 million as total deposits. Yeah. But as of March 2011, we had about $2.3 billion. So you find that more money is coming into the banking sector. And I really haven't heard of banks being liquidated yet.
But I mean, obviously, we've just had like one of these banks going into curatorship just last week. I think it's called Renaissance Capital. I could be wrong, you know. Even the finance minister has spoken about real concerns where banks can't loan, and as a result, loan sharks, private individuals, are now servicing corporate finances in a way in which banks can't do it. That seems to be the situation in the country.
It's a bit of a perception. Because if you look at it, on average, banks have lent out about 80 to 95% of deposits. So that perception that banks are not lending is not true at all. And naturally, we do have a few challenges in terms of liquidity, given where we're coming from. Yeah. But if you are really tracking what's happening in Zimbabwe, you find that we're having more and more institutions buying into banks in Zimbabwe. We're having banks recapitalizing. We're having NGOs coming on board, wanting to partner with banks to distribute and to target unbanked. So I think the banking sector is doing really well.
And you're bullish. Okay.
Yes.
Let's talk about going forward, because there's a big need, as you're saying, you know, not just to introduce banking in the lower scale, as you suggested, but also to support entrepreneurship in Africa. We need more SMEs to come to the fore. We need trade financing as we talk regional integration. We need to start thinking innovatively in that way. What's the approach?
Well, the way that we are doing it, we're very bullish about what's happening in Zimbabwe. Because of that, we've realized that most companies actually do need working capital. Yeah. And as a bank, we have established a working capital fund. And we are financing, and we're going to continue financing SMEs that need to be funded. Because if you look at it, Lerato, this time last year, our industry in Zimbabwe was operating at about 15% capacity. As of last week, the figures are saying that it's gone up to 40-45% capacity, and it's banks that are bankrolling that. So you find that there is a lot of investment that is going into SMEs, and naturally there are challenges given where we're coming from, but we're very bullish about what's happening in Zimbabwe, and we think we're getting things right.